This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. Lower commodity prices are spreading more widely, and a dark mood flowed over Chinese equity markets late yesterday. But first, there was a GDT Pulse auction event overnight. Basically, dairy prices fell. The skim milk powder price was down a bit more than expected, down 2.8% from the last week's full GDT event, and taking it back to levels last seen in April. The more important whole milk powder price was down too, down 1.5% in a lesser retreat than expected. Given how commodity prices have been falling generally recently, perhaps this isn't as tough as it could have been. Meanwhile, in the US, their retail sales at physical stores were up 4.9% last week from the same week a year ago, a much better gain than inflation. So consumers continue to spend, although not quite with the same impressive enthusiasm as a month ago. But they are not spending to buy a house. Existing home sales fell by 5.4% from the previous month to an annual rate of 3.9 million units in June, the sharpest monthly decline since 2022, and to the fewest amount of sales since the start of the year. It was the fourth consecutive monthly decline of existing home sales, as the median sales price climbed to a record high of $427,000. Higher-end houses are still selling, but the middle of the market is now a buyer's market. Unsold housing inventory rose to 1.3 million units, or 4 months of supply at the current sales pace. Also retreating was the Richmond Fed survey of factories in the mid-Atlantic states. In fact, it contracted the most in 4 years. New order levels retreated, although future expectations for new orders are holding up. Perhaps election change prospects are weighing on these firms' outlook. Meanwhile, there was another US Treasury 2-year bond tender earlier today, and it was again very well supported, delivering a median yield of 4.39%, and that was 27 basis points lower than the 4.66% at the prior equivalent event a month ago. In India, their budget delivered a raft of changes. These included increased spending, job creation, and tax relief for the middle class. They hiked their securities transaction tax, reduced taxes on short-term and long-term capital gains, and abolished the angel tax on foreign investment. They also cut import duties on gold and silver, but raised them on plastic products. Income tax thresholds were raised. In the end, this is deficit spending equivalent to 4.9% of Indian GDP and continuing its fiscal stimulus. Modi's allies will be satisfied with what they got. And Taiwanese retail sales improved again in June, up almost 4% from a year ago, well above inflation there. And their industrial production was up an impressive 13.5% on the same basis. EU consumer confidence improved marginally in July, although it remains low and well below its 10-year average. But at least it isn't going backwards. The US Treasury 10-year yield is now at 4.25%, a little change from this time yesterday. But Hong Kong equities fell 1%, and Shanghai was down 1.7% in its Tuesday trade in sharp late sell-offs. Tech capital Shenzhen fell almost 3%. The price of gold will start today up $10 from yesterday at $2,403 an ounce. But oil prices are down $1 at just on $77 a barrel in the US, while the international Brent price is now at $80.50 a barrel. And the Kiwi dollar starts today down another quarter cent at 59.5 US cents. Against the Aussie, though, we're holding at 90 Australian cents. Against the euro, we're also still at 54.9 euro cents. That all means our trade-weighted index starts today at 68.5 and down 30 basis points from yesterday. And the Bitcoin price starts today at $65,848 and down 2.3% from yesterday. Volatility over the past 24 hours, however, has been modest at just on plus or minus 1.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.